Hello and welcome everyone to the week ahead commodity report for the 21st to the 25th of January 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And we will of course be going through gold, silver and also oil prices and our forecast. Certainly over the last week we've again seen some quite large moves here, particularly for the energy markets, with oil prices jumping 3% on Friday. But over the month of January so far, oil is up 17%. So we've certainly seen a surge in prices for oil here, rising after OPEC detailed specifics on its production cuts to ease global supply. We've seen further support come in for oil as well, with hedge funds and money managers continuing to increase their bullish wagers on oil in the latest week. Now moving over to the metals, gold prices have slipped over the last week. In fact, it's the first weekly decline here in 5 for gold, as equities and the US dollar have continued to rise from investors taking on more risk due to growing optimism about talks to end the trade war between the US and China. So with that, we'll move over to the charts and we'll talk you through the key levels that we're looking at next. Firstly, moving over to oil, more specifically US oil. Now, we covered this in detail on last week's report as well, and essentially the trade idea that we were looking at has actually come to fruition here as well. So what we were looking at last week is the potential for oil to pull back towards the $50 zone, and from that zone of support we were looking for opportunities to buy back into any dips, and the ultimate target being $55 per barrel. Now, over the last week we did see a shallow retracement, which has seen oil prices come back towards this level of support, which we saw around $50 per barrel around the OPEC meeting actually at the beginning of December of 2018, where oil found a lot of support just around the $50 mark. We pulled back to that level last week, and then oil price springboarded higher from that zone, and in fact on Friday oil prices hit $54 per barrel. And certainly if we have a look at higher timeframes here on oil, you can see where the V-shaped reversal pattern that we discussed last week has continued to push higher here, and the next major level here is certainly residing at $55 per barrel. Oil prices are up over 4% in the last week, but incredibly over the last month oil prices are up over 17%. So we've certainly seen quite a strong reversal here for oil, and we've now seen 3 weeks of consecutive gains to the upside. And very clearly actually we have a neckline on the weekly chart as well, which is residing at approximately around $54.50 per barrel. So if we break that next week, we would be looking for then a retest back towards $55 per barrel. That is going to be the next upside target here for oil. Now moving over to gold. Well, gold over the last week continued to consolidate, and we mentioned that we were looking really for a resolution, either break through the weekly lows or break above the weekly highs. This is a very tight range for gold here. In fact, you can draw on a pennant formation just on the weekly chart, and you will see where we've still got higher lows, but we also have lower highs. So certainly next week is going to be decision time for gold here. Certainly towards the end of next week on Thursday, I'm expecting a clear resolution of the price action here. We have the European Central Bank announcement next Thursday. Often that can be a catalyst for some big moves in the market. Either we'll see some resolution before the European Central Bank announcement next Thursday, or we'll actually break out later on in the session after the press conference. So I would definitely have that on the radar for next week. I would still suggest gold is range bound as we go into next week. We're moving between $1,280 up to just below $1,300. It's providing a lot of resistance, that zone just below $1,300. It's not a huge surprise to see gold hold around that level. It's provided such a major zone of resistance in the past here for gold, and certainly gold's run up that we saw over December, and particularly the last couple of weeks of December as well, where we saw quite considerable gains on gold and silver. In fact, silver gained over December over 7% to the upside. So a lot of the run up happened actually over the festive period, and then so far in January gold has continued to consolidate. So what I would look at going into next week, bear in mind again, gold is moving week to week within approximately a 200-point range. So I would look for either at the beginning of the next week, 1280 will hold and gold will springboard higher, and it will have another attempt to try and break above 1300, which could be around the European Central Bank announcement next week. Or if gold does not get supported at the beginning of next week, if it breaks below the weekly lows here, again, you want to look at that from a 200-point range point of view, where gold could then pull back to approximately 1,260 to 1,265 US dollars per ounce. Only if gold was to break below the weekly lows there, because 1280 is a major layer of support. There are quite a lot of technical indicators which show support at that zone. So it's either going to springboard off that level and buyers will come back into gold at 1280 next week, or will break it and we'll see potentially a correction going into the European Central Bank announcement next Thursday. So it's definitely decision time again here for gold going into next week, because it's been coiling the price action for 3 weeks. And we'll be watching gold, of course, very closely next week and executing new trades depending on which way gold does break next week. And then moving over to silver. Well, silver's price action last week, we had an inside candle on the weekly chart, which was consolidating around $15.60 per ounce. Silver has rolled over and it's broken back towards this layer of support that we saw previously on the chart, just going back to July of 2017. It consolidated a lot around that level as well, around $15.30 in July of 2018 as well. It's not a huge surprise to see silver consolidate around this zone, given that the gold to silver ratio over the last week found support at 82 to 1. It's now breaking out back towards 84 to 1, which suggests that silver short term will be weaker than gold. So gold should outperform silver, or if you're looking to sell one or the other and we see a sell-off on both gold and silver, silver is more likely to drop lower in terms of percentage terms. In fact, gold at the moment is flat on the month, so it started off at the beginning of January trading around 1,280 US dollars, and we're right back at that zone into the close on Friday, whereas silver is slightly negative now in the month. It's now negative by 1% from where it started at the beginning of January. But we are back in this consolidation zone where we might just see silver ricochet between approximately about 15.20. I'll just draw the level on the chart for you where you can see that. So we could see the potential here to come down to approximately 15.20 to 15.15 if we were to see a little bit more downside pressure with silver, but then that could be a zone where we do see buyers come back in and we could see a consolidation. And then overall, as we go into February, if silver does get some support later on into January and into February, which normally are stellar months for silver, that is where we could then springboard higher and then eventually break above that resistance, taking the price above $16. So we may see a little bit more pressure to the downside next week. I do think 15 US dollars per ounce is likely to hold as a key level of support and could actually be a good buy opportunity to buy back in once you get confirmation that we have got a low in for silver. Of course, it could be that at the beginning of next week, silver just springboard higher from the $15.30 level and we just continue to see it drive higher as we go into next week as well. But I do think next Thursday, the European Central Bank announcement will be a major catalyst and a driver for the next big breakout here, certainly for the metals in either direction, in fact, as we head in towards the end of January. And of course, if you would like to join us, we'll be hosting live trading rooms specifically for all of our private clients prior to the European Central Bank announcement next week. So if you do want to join us, join a community of successful traders, there is an opportunity for you to do so. As a private member of the Gold and Silver Club, you get access to the following. Members get access to exclusive live trading room webinars, real-time trade alerts with trade management and our exact entry, exit and take profit zones on every position that we are taking, trading research and market insights, and you have access to our private members academy website, as well as access to support and mentoring. For more information on the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. Also, make sure you subscribe to the YouTube channel. That way you're kept updated on all of the latest commodity reports.